Welcome back, guys, to another episode from Coin and Capital, where we break down financial news, give you the data, and deliver the truth. Today, Canada is in the hot seat, as it always is. Gold is doing its thing, and that thing is blowing up Canadian headlines. Let's get into it. So, if you guys keep up with economic news from Canada, you've probably seen the headlines. We have blown an even bigger hole in our trade balance with this August data release. Here, chart showing Canada's total trade balance. Well, we can see total trade balance since 2023 has been, in fact, trending down. Believe it or not. Who could have guessed, right? Country built on a facade of economy, an over-leveraged housing market, and government subsidy is running negative trade balances. Who would have thought? However, in the yellow line, we see something quite interesting. And then here in the yellow line, we have exclusively gold, as in Canada's gold trade balances. Now, brief history with Canada and gold. We, as a country, have zero gold reserves, believe it or not. However, our country is a big refining, processing plant. We have some of the most major processing and refining plants in the world, which means global shipments, global imports of gold are sent to us to refine, and then we are selling them back as exports to the world in their refined form. So, the thing with gold is that when we take in lots of gold but don't send it right back, that tends to exaggerate these trade balance numbers, which in this chart we can see here as of August, we did exactly that. We imported more gold than we exported. And now, the big global narrative around gold is that everybody wants some now. Everybody is hoarding some, and people may need it refined. As they pull it out of the ground, China definitely needs it refined. Places like Switzerland, South Africa, they also need it refined. So what we can see here is Canada took in way more gold than we released back from our refineries. Because remember, as a country, we have zero reserves. So this is all coming in and out of refineries and custodians of these ETFs. So when we import more than we export, our trade balance goes tits up. It goes tits up. Running $6 billion deficit in August. However, this does not exclude the fact that Canada's economy is structurally weak. Why? Canada wants to diversify its trade from the US to other countries. The problem is that isn't working. Now, if you guys have seen some of our previous videos on Canada, I've highlighted that Canada's over-reliance, right? We rely on them for over 70% of our trade is a weakness, given Trump's rampage, stuff like that with tariffs. Canada's imports from other parts of the world increase to record highs, but our exports to other parts haven't increased much and are declining. So guys, that capitulation away from the US, away from the dollar system, in order to protect Canada's trade, is going wrong. We thought it was a good idea. It is a good idea. However, execution is not there. As a result, Canada hit a record trade deficit with the rest of the world in August of $12.8 billion. $12.8 billion. That means we are buying $12.8 billion worth of stuff more than we're giving out. So we could be giving $20 billion, but then we go and turn around and buy $33 billion. Guys, it's living life on a credit card, man. It's living life on a credit card. which is contributing to these symptoms of weakness and overall lack of structural integrity in the Canadian economy. Canada's current account deficit hits a record low. Oh my goodness, guys. This is the result of this capitulation away from the US and blundering many other global trade deals, subsidizing the homeless, subsidizing drug addicts, interest rates rivaling healthcare, a leveraged housing market. These could be contributing factors, guys. But the Canadian current account deficit just waked, what is that, like 25 billion? Yeah, guys, this, you can look it up. Statistics Canada, right? Statistics Canada, $25 billion deficit. That's not sustainable, That's not sustainable. And other countries see this as unsustainable. They see the weakness, and other countries know that the only release valve that we have is through inflating a currency. That is it. The only release valve countries that are not world reserve currencies have is inflation. That is it. Their currency will take the brunt of the hit, so the government can continue this ridiculous spending for Lord knows what. And the result of that, guys, foreign investors flee Canada, pulling $83 billion since February. What is that you hear? What is that? That is capital flight. Guys, I've said it before, capital goes where it is treated best, and Canada treats it like crap. What do we get for investing in Canada? You get a 60% capital gains tax. You get $1 million houses that were once like 200 grand. You get free heroin. You can actually kill yourself now at the doctor's office if you really want. They do that now, and then they'll harvest your organs and sell them to your grandma. Yep. $25 billion deficits. We get that too, guys. Canada no longer treats capital like it used to. Okay, so what does that mean? People are fleeing the loonie. Our bond yields, especially the long end, are trying to rise, right? Because the few people that still do hold Canadian debt want to be compensated for this risk. However, rising yields mean higher financing costs for the government. Well, we know the government of Canada, its interest payments are rivaling healthcare spending. So a 4% 30-year, a 4%, 4.5% 10-year is not good, which will happen due to capital fleeing the loonie. So what does the bank do? Some sort of yield curve control to pin rates, which in turn, believe it or not, is inflationary. The currency takes the brunt of it. So what can we do? What can we do? One, if you're in Canada, get the hell out of loony investments, get out of Canadian debt, get out of your GICs, cancel your pension plans. Guys, it's all not worth it. It's all not worth it, because when the government runs 7, 8, 9, 10% CPI, your little measly 5% return annualized gets smoked. Get out of the loonie. Buy something that is anti-dilution, that cannot be replicated. Buy some Bitcoin. Become sovereign. Take accountability for your future, guys. Because this 83 billion is going to continue. Businesses will leave, capital will follow, and soon, if not already, Canada becomes hollowed out. Okay, luckily we have Bitcoin. Bitcoin is the saving grace. Anti-inflationary hedge Take your money, put it elsewhere where it's treated better. It's been real. If you guys enjoyed this video, drop a comment down below. Hit that like button. Make sure you subscribe. I'll catch you guys in the next video.